Alright, it's March 2nd, 2026, and this is the ES Mini Futures 2000 tick chart. So, first thing to do when you get in is to mark your uh, overnight high and overnight low levels. This will come into play at some point during the trading session. They're important levels to know. Um, so in the overnight, it looks like what happened was we had this leg down from the overnight high, and then one leg, two legs to a new low, which is what created the overnight low. And we bounce out of there. So this is the original leg up, but because there's no two-legged correction here, and then we uh, push up twice more, you'd want to. We have to kind of wait here uh, to see what the market does, because this is a reversal area, because technically this uptrend has a break with two legs to a new high. So the market could reverse, which you can see the sellers came in and attempted to do it, but didn't go very far. So the way that you would view this then is this here is now just one leg up. So on a bigger picture, this is one leg altogether, where on a smaller picture, even though it's around the same time, but that's how you would view it. So then from here, this uptrend to this point needs a new high. So this is the new high level here. So technically you get a break to a new high here, but oftentimes when you're drawing out measured moves, like this is your first leg down, you oftentimes you can get it off of the body of the second uh, leg down, because this wick doesn't necessarily count as a new high, especially because there's normally news at 8:30. And anyways, so basically you want to watch the second leg down and see if you get a good reaction off of it. And if you do get a big bounce and it pushes above the EMA and closes above the EMA, we can look to get long there. And the way I like to trade is 1-to-1 risk to reward. So this is the first setup that I saw today. Um, and that's 40 ticks, which is 10 points. Um, also, if you notice, going, let me move this for a second. It is also going sideways here, so technically we want to be playing range rules, and based on range rules, we want to buy low and sell high. And because the context, the bias of the range is upwards, because we're looking for a new high off of this leg. So we want to be looking to buy low here. So if you take that into context as well, this gives this trade even more conviction. You'd have to ride it out here, because this is right at market open, so it's moving pretty quickly. But on a bigger picture, this is a higher low, right? Which is also a good entry. So yeah, that's the first trade I saw that day. And you can see that this range is confirmed at this level, because they tried to sell here, but obviously on a bigger picture, this uptrend is the target for where the market's going. And from there, we push up like this is such a strong leg up that um, the odds are we'll retest this high as well, especially given the fact that most likely at this point we're headed to the overnight high, which is where we end up here. Um, so this is, so now because we have so many legs up, and this has a break to a new high, and we're coming off the overnight highs, technically we're expecting a reversal here at this point. So we're expecting the market to push down, and then we would want to see two legs of correction back towards the EMA, and then we could look to short and then catch the market reversing. But so you just have to wait in this area, um, because we have to see what the price action is going to do. But after we push up again from there, you can now assume that there's probably a wider trend working. And you can see that if you draw it off the lows over here, we get the first, second, third bounce, which does make it a valid trend line. The third bounce is what validates it. And then obviously further on in the price action, you can see that people were buying on it again. So at this point, what we're doing is we're just looking for like the push phases, right? Like these are all push phases, like anywhere you can see it uh, like bounce tremendously. And then we're gonna look for two legs of correction, measured moves, right? This leg being equal to that leg. And then we're gonna look for a reaction off of it. And if we get a good reaction, as soon as it closes above the EMA, like a bullish bar above the EMA, you look to buy and then go for a one-to-one. So just let's go a little more local here. So here we get our first leg down and then the second leg, but it doesn't quite make it here. But this is a second entry, so if you were scalping, this would be a good area to buy. But right, so so we're looking for a new high of this channel now. Makes a new high, and then we bounce off of the overnight high, and then you get a two-legged correction here. So if you get a bullish reaction here, and we do get a close below this bar, but the problem here and the reason why you can't take this trade is because if you go for a one-to-one risk to reward, which is this, then you have to be getting out before this measure move is made, because we don't know we're gonna like fully reverse down, and like in this case obviously we don't. So you can't enter on this trade. You would want to see something more convincing than this, because the one-to-one doesn't reach. If you draw it off the bodies, it reaches, but you have to start by drawing it off the wicks to see if it reacts at that level. If it doesn't, then you can see if it reacts off of the level where the body's closed. So you can't enter here. It's very tempting to enter here, but you can't, because you can't get out at a one-to-one, and you want to be trading one-to-one because it works quite well. Anyways, so no trade there, but it is an area of interest, and you could get fooled here. If you weren't following your rules, then you could get fooled here because, again, we need to be able to get out before this. So from there, push up, There's no like two-legged corrections in here, so you're just kind of waiting. And then you get two legs here, and this also looks like a very tempting area to get long, but there are two things here. First off, we've made a pretty big move up here, and you can see that we're not pushing like higher into the trend, which is this line up here, which kind of means that the market's getting a little weaker. So oftentimes, just from experience in the market, they'll make it really enticing to go long here, and they'll trap a bunch of people because the sellers are going to try to make another leg down. So you can see here that we get the two legs of correction, and oftentimes you draw it off the top of the second swing, right? But oftentimes, like, you'll see that if there's like a lower high, that the start of the second leg will be off of the lower high. Like either, so like after this two-leg correction, we're looking for a new high to be made off for this big channel here. So that green line is the new high, right? We're looking for a new high for that. So we're thinking long here, right? And this is, you can see as well that the overnight high level here is kind of coming into play here as well, right? So the reason, yeah, let me back up here a little bit. So the reason you wouldn't want to go long here is because this just looks like it's fizzling out to me. So you wouldn't want to go long because I'm expecting it to be a trap. Um, and then other thing is even if you tried to get long, you couldn't because you never got filled on this order. And then also look where your one-to-one profit target is, right? Are we really going to try to push into new highs of a day on the trade? Probably not a great idea, right? So that also gives me the heads up that we're probably going to make a second leg down of that. So as price action goes on, like what was once two legs becomes one leg on a bigger picture. And you can see that the measured moves were pretty perfect here. And then we get a big strong bullish reaction. So this would be your sign to get long again. And there's your one-to-one. And you can see that I'm fairly certain, like I'm not too sure, but I'm fairly certain that a lot of traders go for one-to-one because you can see as soon as the one-to-one area was hit, this general area, that it the sellers came in, and then we'll get into that in a second. But yeah, this is the second trade of the day here. There's another 11.5 points. If you want to see the time on that as well, that's for you. So 9 minutes for 11.5 points. Okay, then, so now this is our first leg up to a new high. Okay, so now we're expecting a new high for. Let me just move this. Sorry, where is it? Too many lines in here. So now we're expecting a new high for this leg. We want a new high for here, and we're expecting a new high for this leg, right? So we got our first leg of correction, and then our second leg of correction, right? Again, You could draw it off the top or the bottom. The bottom seems to fit nicer, but it's the same result at the end of the day, so it doesn't matter. But then here's another trade. So we got this uptrend expecting a new high, and this bigger uptrend expecting a new high. And you can notice where it bounced perfectly, right off the overnight high level there. Right, so that's another reason to get long. So another one-to-one risk to reward. Gets you here, it gets you out. So normally you would want to get out like before this new high, but because the context is so good here, you can afford to risk getting out one tick above, because we're expecting, after the two-legged correction, we're expecting the second leg equal to this one, which you can see made perfectly equal. So yeah, go long here. This is a good spot to get long. Very good spot. A lot of good context on the chart there. Okay, moving forward, and then you can see that from there, because this big uptrend has a break, a two-legged break with two legs to a new high. That's a perfect place to expect the market to reverse, right? Because now we could be fading back into the range, and it could be a range day, and then we could push down and test this overnight low. We don't know what it's going to do from here, right? And you can see that a lot of selling came in at this level. This is just, this is an overshoot. Like, you can look, like, sometimes it will end up being that leg, and then you'll get like a much larger leg down, like to here. And then you would want to see like two legs of correction. And then if you got a good reaction off of the measured move, this would be a good place to go short. Because now what was once support in the overnight high is now going to act as resistance. And this downtrend is going to need a new low. And so we're going to look for two legs of correction, and then we're going to look to sell again. But that doesn't happen here. So this, just based on this trend, like this is the third bounce. This looks like an overshoot because normally if you play a measured move on the trend line, yeah, it will sometimes bounce off of that and then just turn into like a steeper channel. But you just want to chill here. They're no, because you're not sure if you have an overshoot or not, you can't look for a selling opportunity here. And then it's the same thing as over, where was it? Over here, where even if you were trying to sell, you couldn't, because you get no trigger on this bar. What if you did? If you did get a close here, you'd probably still want to wait, because it's not convincing enough to tell me, okay, we're definitely headed lower. It doesn't look good enough. So I'll skip that one. And you can see we push up again, and then we get a big push up. So this does kind of act like an overshoot, which, for those of you who don't know, overshoots on trend lines lead to either a break in the trend or a reversal. So you kind of have to just play it safe. So after we got another big push up here. You're gonna want to start looking for some other type of trend line. So in live time, I played this channel. Right, as you can see, we're getting nice bouncing all the way throughout there, right? There is, looking at aftermath, like in the aftermath after I've been studying, there is a flatter channel in here as well, which fits very nicely, but it doesn't necessarily matter because the price action today, it leads to the same result. And I'll show you. So we'll start with this one. Where did I get that from? Okay. So after this bounce, like this big push up, I wanted to make sure to get this in the trend channel. And like it fit really nicely. So it doesn't matter. Whatever trend line is there, it ends up in the same result anyways. So big push up, and then we're just, again, looking for 2 legs of correction to get a new high for this leg, right? So this is this is an interesting one. Um, so you won't always get like one leg and then two measured legs. Sometimes what also happens is you get just 2 legs to a new low. And the reason why this happens sometimes is often because of congestion. And you can see that you're playing range rules in here. So looking back, like this is an aggressive trade because it's a good context, but you would want a better signal bar because it's hard to enter on that. And then by the time if you don't enter there, then you've missed the move. So it's aggressive in a way, but then it's also really quite like a low risk trade. You're not gonna lose a lot of money here, you know. So is it worth the risk? I don't know. You tell me. That makes a new high, right? So now this uptrend has had a break with 2 legs to a new low, push to a new high. We get 2 legs of correction here, but it's too like thin. Like I know you get 2 legs here, but the reason you don't want to get long in here is because first off, yes, we could get this second leg to a new high. Well, we're not sure, and we haven't met the measure move before we pushed up, you know. There also is a new high, so it's just not a good place to look to get long. You want to wait because there's just not enough evidence to say we push higher. And then you get 2 attempts. 2 new high, come up short, and the same thing that happens here, you know, 2-legged break, we end up getting 2-legged break, right? Um, the the fact that we came up short of this second measure move also normally hints at the fact that we will be getting a break in the market. like or for the trend, sorry. And you can see that we pop out here, break the trend, we get another 2 legs of correction, right? We get the first bounce here, right, which is off of the normal trend line. But then the sellers are like, sellers want to get a break of the trend. So then we can go make a new high and then reverse again. But yeah, once you get this big push up here, right? Everything's aligned, like all the context is right for this. You can get long here again on a one-to-one risk to reward trade. Because now we're expecting a new high off of this trade or this overall trend, right? Like this now needs a new high after that break. So now this trend line has a break to a new high. And then what happens? We get this reversal attempt, right? So now this is one leg down. As far as we're concerned, there's no bigger uptrend, right? This leg now needs a new low. We're not looking to get long anymore up here, right? Because this is played out. Both of our trends for the day, that one and this one, both played out. Even this move up is played out. So everything going long is played out. There's no more reason to be looking to get long. So this move down now needs a new low. And you get the same thing here. This goes into market close. You wouldn't want to be trading this late, but it's the same thing, right? And this is probably, yeah, like I was saying earlier, sometimes it's off of the higher low where you start your second leg. But again, same result, right? This is just going to give us a general area as to where the market is headed. And then from this area, we're going to wait for a reaction. If we get a good reaction, then we're going to look to get short because we're expecting now this leg to happen, right? So you have another trade here. Like you could enter directly under this bar if you wanted to guarantee entry. Make sure talk one-to-one, like a fairly decent sized trade. Looks like a good area to get out at too because you can see that there. We have bounce in here a little bit, and that's probably because on a bigger picture we're in some sideways congestion, right? So you can see that all these prices, they move for a reason, and they're areas that they're trying to get the prices to get to, and these measured moves are just a really good way at help you help you navigate the market, you know. So yeah, it's a good entry, and you, it, sorry, I'm stuttering. If you wanted to, you could also drop a limit order in here, and that would help you get a better entry if you were worried about where the entry got you in at. But, you know, I see no problem with getting out there, right? So now, it's also interesting because this is now the overnight price action. And what I'm expecting is that on a bigger picture now, that this is all now just one big move up from down here all the way to here. And now you're getting your first leg of correction, two-legged pullback, and then your second leg of correction. And that second leg of correction brings you right to yesterday's overnight high, which would be a great level to look to buy at, right? Because now on a bigger picture, this is just coming back to test this overnight high level. So yeah, if we come down and test this, perhaps tomorrow morning, probably now, this price action will probably play out in the overnight session. But yeah, if you come test this level and push through the EMA strongly, like you get a good reaction off the level, then you look to get along with it. But anyways, this is my my first attempt at commentating my market analysis for the day. I'm not particularly seasoned when it comes to speaking to audiences, so there are probably a lot of hms and ha's and ums, but maybe if I continue to do this over time, I'll get better. There's another one. If anyone has any questions about this, you can just comment on the YouTube video, and I'm more than happy to answer. This price action is applicable in any market. I just like to trade the ES. But price action is the same in every market. Like once you learn to read where the market's going, it follows the same rules forever. Like you could go back through 10 years of data and it'll still be the same. So it's a good skill to learn because it's always right. It never lies. And not too sure why that the market moves in series of two like this, but it works. So if you're into day trading and you're looking for something to test out, you can give it a go yourself. I know trading is different for everybody, so it's just a good thing to study and learn measured moves. Anyways, comment, like, and subscribe. Take it easy.